Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we are going to be looking at a couple of American and Chinese companies, but also going to be looking at an Australian company. The companies that we're going to be looking at today, remember there was a time where we attempted to go live, but we had network challenges. Then we said that people can just list names of companies that they would like us to cover. We got response from some of the viewers and subscribers. Somebody requested companies that I need GSE. So to that person, we're going to do a separate video covering those GSE companies. Those companies included ABSA, AFRIMED, ShopRite, Transaction Capital, and MTN. But in today's video, we want to address the companies that are outside South Africa that were requested by people. And these include AMD, DocuSign, or DOCN. I forgot the name of the DOCN ticker. And then there's NIO and SoFi. But also, there was some time that Shirley asked that we looked at the call Lithium. So I'm not too sure because I'm trying to find that comment. I'm not seeing it. So I'll be looking at the call Lithium Limited. I don't know if there's a call Lithium ETF. I will just try to check. So everything that I'm going to say regarding some of these companies, especially NIO and SoFi, is going to be based on technical analysis on how I pick these companies. It may be something that is opposite to your view. It's fine. Remember, whenever we invest, we are investing our money. We all use our approaches in the stock market. There is no right way to invest in the stock market. There's the way that you are comfortable with, the risk that you are willing to take in a particular company, right? Because of all the companies, the US, Chinese companies, I don't have in my portfolio. They don't give me a good buying signals at the moment. So yeah, I just want to say that. And then for the Call Lithium Limited company, I don't have it because I don't trade the Australian stocks yet. The reason why I'm not trading the Australian stocks is because I don't have a lot of money in my USD account and I'm avoiding to thin out my investments. By that, I mean that I'm comfortable with the balance on my South African Rand account, EasyEquities account. Now I'm trying to grow the balance on my eToro account, which I use to trade US stocks and ETFs, but also to grow the capital in the EasyEquities USD account. So now if I go and start to invest in Australian market, then I won't have enough cash to grow the USD account. So at this moment, I'm comfortable with missing the opportunities in the Australian market. But for viewers and subscribers, if there are Australian companies that would like us to cover, just leave them in the comment sections. Then we'll make videos for those companies so that you cover them. Just because we don't trade them doesn't mean that we can't identify opportunities where we would trade if we were trading those markets. So once again, for the American and the Chinese company, what I'm going to share with you is how I would look into those companies before I'm making a buy decision. So let's pretend that I am making a decision to decide whether I'm buying these companies or not. It's an objective assessment based on how I approach the market, not because I want to suit your narrative or to give you something, how can I put it, or maybe just like, for example, to be swayed by your view on the stocks. I'm not going to be swayed by your views. I'm going to cover these stocks objectively, the way that I cover all the companies that I buy. Then in the end, I will also throw in 2 US stocks that I traded actually last week. Then I will show you why I chose those companies. So without wasting time, let's go and look at the charts. So the first stock that we're gonna be looking at, AMD. I'm trying to find the full name of AMD. So AMD is Advanced Micro Devices. They are in the semiconductor sector. It's a US company. It falls under the technology sector. They do semiconductors. Before we look at the chart, we're gonna go to Yahoo Finance and try to look bits and pieces of some information about AMD. So if once you're on Yahoo Finance, you can just search the ticker. In this case, I've already searched AMD. Then if you go to summary, there is some information that you can find about the company. You can see that the current share price is around $85, and the 52-week range it traded between $72 and $164. And then there's some information about dividend yield and when the earnings date are coming. Remember last week we saw that we were in the earnings season in the US. So the earnings for the stock are coming this week. We saw that some of the companies, especially the companies that missed the earnings, they were heavily punished in the market. So if AMD also misses earnings tomorrow, which is the 3rd of May 2022, then we shouldn't be surprised if AMD gets hammered again. Then whenever I'm looking at a company, this is just a snapshot of information that is available. It doesn't really mean much to me. But for the people that do fundamental analysis, if you go under financials, there you have options to look at the income statement, the balance sheet, and the cash flow of a particular business. Basically, in the income statement, the things that I'm interested in, I want to see the revenue, which is the income that the business generated. As you can see in the quarter that ended at the end of December 2021, AMD brought in about 16 billion, and then the gross profit was about 7.9 billion there. Then whenever you look at the net income after subtracting all the expenses, they had a profit of about 3.162 billion there. So we can already see that it is a profitable company. But now when you look at the earnings, the basic earnings per share, we see that from 2018 we're looking at 0.34, and then in 2019 they dropped to 0.31. The drop is marginal, and then by 2020 they grew again to 2.1, and then in 2021 we have missing values there. The company was profitable, so I don't understand why the earnings per share we don't have a figure there. Then you can also look at the balance sheet. In the balance sheet, I just want to look at the current asset. You can see it's 8.5 billion, and then also to look at the current liabilities, which is 4.2 billion. Then what we see, the difference between the current asset and the current liabilities, we see that we have a positive figure there, about 4 billion. So now I'm confident that if I'm buying this business, I'm buying a business that is not profitable. It's a business that is healthy, that has a positive net working capital, meaning that if they have short-term obligation, they will be able to cover those obligations. Then whenever you look at the cash flow statement, other people are interested in the cash flow statement. So here you just get a breakdown of how the company is spending the money. We can see the net income, which is the profit of 3.162 billion. And then you can see they have an inventory of about 556 million there. And then we look at the net cash operation, which is about 3.52. But the thing that I'm more interested in is the cash flow that they have, or cash in hand. So when you look at the net cash in change, and then we look at the cash at the end of the period, they have about 2.53 billion cash at the end of this thing. And then we look at the operating cash flow, which is 3.52, which is again it's close related to the net income. And then the free cash flow, other people, whenever they want to evaluate companies, they evaluate companies using a free cash flow. I don't use that simply because I don't know how to use this figure in terms of analysis and then trying to put a value in a company based on the free cash flow. But the good thing that we see that it started from a negative figure and it has been growing. So that is a good sign. It's a sign of a healthy company. Then now let's look at the chart, because that is the only reason why I would want to buy the company or not buy the company. I don't have a position on AMD. The reason for that is because as we can see from the chart, there was a time where AMD was on an uptrend, and that is when a lot of people started buying AMD, and then somewhere around $160 per share it topped there. And then it started to come back to this level, somewhere around $120 per share. But looking at the previous levels, which were the previous resistance level, of which it broke somewhere around July 2021, then the stock started to trade below this level. which is around $100 per share. So at this moment, the momentum of the stock is bearish, so there is no need for me to buy the stock. Even if I wanted to buy a dip, I would have wanted to buy a dip somewhere around $100, expecting that the share price was going to bounce up there, but it didn't. As you can see, it broke below this level here. It's currently trading at $85, which coincide with this level here. So once again, from this level, if the stock fails to bounce up going back to $100, then the next possible stop momentum is that the share price is going to drop to come to this level, which is about $70 per share. So until the stock has stopped going down, I won't have a reason to buy that particular stock. Remember, as much as I'm a stock trader and an investor, I don't want to put my money in a company that has a falling share price. So it's better that I wait for this stock until it shows me signs that it's starting to move upward. So that is the analysis on AMD. The share price is currently trading at $85. If the stock finds support, especially after the earnings, it will depend. If they have negative earnings, then we shouldn't be surprised if we see a gap lower, maybe going all the way to $70. Then if it gaps lower, again, there's no need for me to buy that stock. You can see for the past week, there've been a large selling pressure there. You look at all those red bars, meaning that market participants have been selling this particular stock. So at this moment, I don't have a reason to buy. I'm waiting to see what happens either at current $85 per share or at $70 per share, to see there, because if it breaks below $70 per share, you can see the next support level is somewhere around between $50 and $60. So if I buy at 85 and then it goes to 50, it means that I'll be losing about $30 per share, and that is not something that I want for myself. So at this moment, I'm bearish on AMD. I don't have a position there, and I won't have a position. For the other stocks, it's simple. There's no need to go to the financials. I know that Shirley asked for DocuSign, so I hope that DigitalOcean is the correct stock that she wanted me to cover, because I know that also there is a DocuSign. So you can see this stock has been on a downtrend for quite some time. It depends on when you bought the stock. The people who bought the stock somewhere around April 2021, they enjoyed this nice ride all the way going to about $130 per share. But the mistake that we make in the market, we tend to believe that the stock market is always going to go up, of which it doesn't. We can see that the following week, once it reached $130 per share, the share price then it tanked, coming back to about $100 per share. And then I just want to see the amount of volume when that happened. So we can see on this week, when we had this, we can see that we had a large amount of volume coming on this level there, and that is just an above average volume. So it tells us that there were a lot of sellers that were really pushing that stock. Then the following week it fell again, and then since then it has been falling ever since. Now it's trading at around 39.43. So now if you look, if there was an IPO for this stock, then the share price is trading again around the IPO price. So if the IPO price was somewhere, you can see when the stock started trading, this was the low of the day, which was just below $39, and this was the high of the day, which was above $39. But when you look at the open and the closing price, they were at the same level, meaning that if the stock I just want to have the correct figure there, where the stock opened. So the stock was trading at around $41 per share. So it opened at $41 and then it closed at $41, even though the range, the low of the day was around $37 and the high of the day was around $45 per share. So at this moment, the stock is trading at around 39. It has traded at a lower level here around the week of the 10th of May. The low of the week somewhere there was around $35. So it might happen that the stock is going to go back to that low of that thing. of the previous years. So at this moment, the stock, as you can see, the writing is on the wall. It's already bearish there, and there's no sign of slowing down. Basically, what I want to see in a stock, you can see now it's already on the downtrend. Before I can buy a stock, I want to see it stopping going down, and then maybe start consolidating sideways, meaning that the downward momentum has reached equilibrium. So now there's a fair balance of buyers and sellers. Once it creates this trading range, then I wait for an upside breakout. In this case, that means that the stock will go back to the resistance level, but instead of going down, it then breaks above this level. Then I can have my buy stop order just above the resistance level here. So I don't have a reason to buy a Digital Oceans holding. The downward momentum is still strong. You look at the size of these downwards candles, it tells you that the sellers are still strong. So let's see if the stock is going to come and retest the low of the day. But there's nothing that is going to stop the stock from trading below this level. It happens. We've seen it with different stocks in the past. But now it's just a matter of waiting and seeing. Nothing is coming from fundamental analysis. So to me, it doesn't really matter what the company is doing. What I see from the chart is that there's a downward momentum. So I don't have a reason to buy this particular share in my portfolio. But another stock that I wanted to cover is DocuSign. I know that DocuSign, they provide some digital signatures for companies. These are some of the companies that did well with the emergence of the coronavirus. As you can see, around 2020 at the beginning, when the US market was crashing there around March, and then the stock started to trade above this level when the lockdown started. Then since then, the stock had a nice run going all the way to about 320. But now when you look at the business itself, did it make sense for this business to go all the way up? Well, that one is not debatable. It's up to the people that are interested in the stock. It's either it made sense to them or it didn't make sense. But somewhere around $320 per share, that's when the stock topped. Then it started to come falling. We can see somewhere here around November 2021. Then that is when the stock crashed from up around $260. It crashed all the way to about 140. So that was a nasty move in 1 week, and since then the stock has been moving sideways. If you look at it, it's now back to the pre-COVID levels of $81 per share. Once again, there's nothing that is interesting me in this company. It doesn't matter whether people are interested in digital signatures or not, but the stock is bearish. Basically, most of the stocks that you guys asked me about are bearish. It's not that I'm hammering the stocks that you are interested in. I'm just simply sharing whether I will be interested or I'm not interested in those particular names. So that's the story of DocuSign. It's coming back. If for those people that bought DocuSign when it broke above this level at the emergence of the coronavirus, or when the market was actually affected by coronavirus, if you didn't keep your money on the way up, hopefully you were able to sell some. Otherwise, at this moment, you'll be sitting at break even. So you should never allow, whenever you make money from the stock market, we made a video to say that if the stock market makes money available to you, you should pay yourself. By paying yourself, we're not necessarily saying that you should withdraw money in your account. We are simply saying that whenever there is money available sitting there on profit, you should sell some of that position to keep or to lock in that money, and you can use that money to buy other companies that can also give you or that can also make you money. Because if you bought around March 2021, or it was March 2020, and now you are still holding the position around May 2022. Basically, you have wasted time, because you have been sitting at this. Instead of making money, you made some money, but you gave back that money to the market. So it is important that whenever you are sitting on a position, a profitable position, you sell some of that. Even you can sell half, or you can sell a third, you can sell a fraction of that position, just to make sure that you lock in some of that money. Because if you don't, and the stock market, it comes back, it reverses, you start to give back those gains. Basically, what you have done, you have just wasted time in the market. All right. Then let's look at this. I know this a lot of people are interested in this stock. So this stock is NIO. For the people that don't know what NIO does, NIO produces electric cars. It's a Chinese company. There are a lot of companies that are producing electric cars. Companies that exclusively produces electric cars includes Tesla, NIO, there is Lucid, I think there's SPV or XPeng, I don't remember the full name, but yeah, this company it produces cars. You can see here it's based in China. It falls under auto manufacturers, and well, they classify it, FinVis classify it as a consumer cyclical. So let's see what kind of information you can find from Yahoo Finance, because what I'm interested in at this moment is the income statement of this company. I just want to see if this company is indeed bringing cash into the business, right? So now we're looking at the financials dating back from 2018 to the end of 2021. We look at the total revenue. You can see all the numbers are in thousands, meaning that they're in billions, but the currency that they're using, it's Chinese yuan, it's not US dollars, right? So we can see that at the beginning, around 2018, they brought in about 4.9 billion, and then at the end of 2021, they brought in 36 billion. So it's nice. We see that the revenue is growing, and then when we look at the operating income or loss, we can see that from 2019 the company had a loss of 9.5 billion, but at the end of 2021 they had about 4.4 billion. We see that the loss is decreasing. It's possible that they are now fully invested in the business, meaning that they no longer put a lot of money to grow the business. If you look at the research and development that they're doing, the cost is still increasing there, and then the selling general and administrative, the value there, it fluctuates. It went down and then started to pick up again. I guess maybe it went up because more and more people are interested in the cars. We look at the expenses of that business. There are different kinds of expenses, but our main focus is the net income, which is the profit of the business. We can see that they started from a loss of 9 billion in 2018, and then they closed 2021 with a loss of 3.9 billion. And then we look at the basic earnings per share. Even though the basic earnings per share are improving from -70 all the way to -4, we don't have figures for 2021. Right now, I'm just going to give you an objective view of this. What I like about NIO at this moment is that the revenue is growing, even though the business is not profitable, we can see, but the loss, it keeps on decreasing over time. Even the earnings per share, they keep on decreasing over time, or they keep on improving. You look, we started at -70 all the way coming to -4%. So if the profit, if they ever report a profit, then we can expect to see positive earnings per share, which is good, because it will mean that now that company is profitable. But based on this, we can see that there is a bit of improvement. Now let's look at the balance sheet. We can see the total current asset, they are sitting at 63 billion. Then when you look at the current liabilities, they're at 29 billion. So another thing, it's nice that they have a positive net working capital. So let's see if they have any kind of cash that they have. Cash at the beginning of the period, they started at 7.3 billion. Okay, this company is burning cash because they started with 7.5 billion in 2018, and then in 2020 they were now sitting at just under 1 billion. So where did this money went to? Let's see in the cash flow of statement. Okay, there's a change in working capital. We can see they started at about 505 million all the way to 4.8 billion. So yes, the company is really burning cash. I hope that cash, it goes to improving the business as a whole. So based on this, you can draw your own conclusion for this company. But let's look at the chart, right? This is where the rubber meets the road. So when you look at the chart of NIO, okay, I don't want that. So we look at the chart of NIO. There's a lot that you can say about this business. Going all the way back, we can see that the business started to trade somewhere around October 2018 when it listed in the US. Remember, it's a Chinese company. It's either listed on the Shanghai stock market or Hong Kong stock market, but in the US they can get, there's something that they call ADRs. Basically ADRs is just a certificate. It's something that people can trade in the US that gives them exposure to this company. So we can see that the share price here is listed in US dollars. So the IPO, it opened somewhere around $8. I just want to get the correct price. So it opened at $9 or $10, 9.92, and then the low of the day that IPO was $5.48, and the high of the day was $16.70 there. And then for quite some time the stock has been moving sideways, as you can see that it's been forming a base. Then when we look at that previous high that it once made, so somewhere around July going to October 2020, that is when it broke above this level. For me, that is when the stock would have been interesting, because it means that it's outside that IPO base. IPO base, I think, remember when companies list, well, I don't know how or when NIO listed in the Chinese or in Asia, but in the US the IPO was somewhere around $12 or $10 or so. So whenever a stock lists in the market, it can just trade below the IPO, except for Thungela. Of course, Thungela is just one stock that quickly went up there. So you don't want to be stuck with a stock that is not attractive to investors in the market. But as soon as it starts to trade above the IPO level, that is when the stock becomes interesting. And then from there, we saw that Tesla also grew from about around $100 all the way to $700 and also going all the way to above $1,000. So a lot of companies benefited from that market rally. It's possible that NIO also enjoyed that, because you can see it started to trade from about $12 per share and then going all the way to just below $68 per share. And then from there the stock started to pull back at the beginning of 2021. We see that it crashed all the way to about $32, which it crashed by half. It attempted to rally a couple of times, finding support around $32. But now what we see here, this was a high, this is a lower high, because this high is not higher than that. And then again somewhere around 40, then it created another lower high. So whenever we're looking at a stock, we're starting to see a patterns of lower lows and lower highs. It tells us that the trend has changed. Now the stock is starting to trade in a downtrend. Once we start to see this characteristics, we are no longer interested in that particular stock, because there is no money that we are going to make from that particular company. And then we saw that eventually the stock it closed below this support level, and then it's been on a downtrend ever since then. So now it's getting closer. We saw that this week, just before April 2022, the stock tested that IPO breakout level there. It's currently at around 1670, so it's possible that it can come back to $12 there. If the stock does not find support at this level, then the other scenario is that it can continue to trade lower. The lowest that a stock can trade is 1 cent, so there's no saying that the stock cannot go below $10 per share. But the positive upside, if the stock does find support here, then maybe we can start to see the stock trading above here. Once again, remember we said that whenever we see lower lows and lower highs, it means that the stock is on a downtrend. And then for this stock to start moving up again, we need to see the opposite of this, which is going to be the higher highs and higher lows, higher high and higher lows. Then that tells us that the stock is moving upside. The trend has changed again. This is going to be the higher high, and this high is higher than this previous high, and then this high is going to be higher than this, and this low is higher than this low. This is the characteristic of an uptrend. If you've been watching this YouTube channel, you should be familiar with this. If you haven't been watching this YouTube channel, please make sure that you subscribe to the YouTube channel so that you don't miss these videos. We always do stock analysis and we put it on YouTube. We cover the characteristics that we look at from these different companies. So in short, for NIO, we're just going to wait and see what happens around 12 12 US dollars, because if it doesn't find a bounce there, then we're not going to see that moving up if it doesn't find the support. But if it does find a support, then we can expect it to trade higher. But the worst case scenario is that it's going to trade below $12. If it trades below $12, then there's no need for us to hold that stock. We are not negative on the stock, but the question that we would like to ask viewers, we know that Tesla is profitable. They reported good result, even though the share price is trading at around 900 US dollars. When we speak of expensive, we're not talking at dollar terms. Why would you want to buy NIO over Tesla? Remember, there are plenty of EV manufacturers. There's NIO, there's XPeng, and there's Lucid, even the big companies that I know. Remember that F.I.R.E is going to release an electric car. So what makes you think that NIO is going to perform better? I understand that NIO is a Chinese company. It probably has support from the Chinese government, or it will have a large market in Asia. But the question is, Tesla not selling in Asia? What will cause? Okay, I understand that Asians are patriotic. Maybe they will prefer to drive a NIO over a Tesla. But I would just like to hear your views. Why are you guys interested in NIO? Do you think that NIO is going to outperform Tesla in the near future? Or are you just trying to buy an EV that is affordable in dollar terms? I'll be interested to hear that in the comment sections. Right, so let's look at the final stock. The final stock from the request is SoFi. As far as I know, SoFi is a fintech company. I heard that they were talking about collecting debt. Let's see what does Yahoo Finance says about SoFi Technologies. Right, let's see. If you go to summary, you can get a summary of what the business does. Right, so SoFi Technologies, it provides digital financial services. It operates through three segments, which is lending, technology platform, and financial services. For those that are interested in politics, the president of the US, Joe Biden, is talking about student loans. So I know that they're involved there in the student loans. But in short, it's a fintech company. So the question now is this company a profitable fintech company? As we know, other fintech companies are profitable. So when you look at the income statement for SoFi Technologies, from 2018 they brought in 269 million, and then the end of 2021 they brought in just under a billion. When you look at the earnings per share, they're actually getting worse, starting from 0.31 going to negative 0.39. So it means that in terms of income, they keep on losing more money, from negative 252 million to to just under negative $500 million. So in terms of profitability, the business is not profitable. When you look at the total asset, well, it's a technology company. A friend of mine, we've been having this discussion in terms of assets and liabilities for tech companies, specifically assets, because things like intellectual property are not easily evaluated. It's not easy to put a price on that. Maybe that's why we don't see a lot of current asset and current liabilities, especially if the business does not own physical buildings. You know, when you look at the balance sheet, there are things that are interesting in the business, things like PPE, property, plant and equipment. We don't see a lot of those with tech companies. Then when you look at the cash flow, I just want to see if they have free cash on hand. So when you look at this, we don't see, when you look at the cash at the beginning of the period, so they have a nice cash amount. From 2018 they have about 500 million, and now they have about 768 million cash there. But when you look at the free cash flow, they started at positive 1 billion, and then they've been burning that cash. Now they have negative free cash flow of 1.4 billion. So on paper, it's not a good business when you look at it. And then the chart just the chart illustrates the same thing, that it's not a good business. So we look at the IPO price there around $10. We can see that the share price is already trading below the IPO price. There's nothing wrong with that, but if you bought at IPO, you should at least have exited somewhere around $24. If you didn't exit, it means that you gave back those gains when it came back to $10 per share, and now it's currently sitting at $6. Again, there's nothing that can stop the stock from going all the way to about 1 cent. I don't want to say that it's going to go to zero. So I don't like SoFi Technologies. It's not a company that I will add into my portfolio. I'm very bearish on the stock, but I mean, there's nothing that can stop the company from fixing itself. Once the company fixes itself, the fundamentals, the changes, they become positive once again, and then we will see that it will be reflected on the chart. One thing that I want to share with you is that in the stock market, we are not being rewarded for staying through the dark times with the company. We are only rewarded for buying a right company at the right time and paying the right price for that company. I know that there are people that are hunting for discounts. If that is your approach in the market, by all means continue to do that. But my approach is that I want to ensure that whichever company I'm buying, that company is on an uptrend. I don't want to waste time to picking companies that are trading way below. There's nothing wrong with paying a low price for a company, but if the share price is falling, then there's nothing that I'm going to get from that company. Right, let's look at the final stock that Cheryl asked. I said that it's called Lithium, so I hope that I'm looking at the right. So just for things I will also look at, maybe let's start with the ETF. This is the only ETF that I see in front of me. Okay, I see there's also an amplifier in the US, but let's start with the Global X Lithium Battery and Tech ETF. It's listed in the US. So what we see from this one, it's nice, it's on an uptrend, but it is already trading below a key moving average. It was nice to buy this ETF somewhere around June 2020 and holding it here. So now we see that around when it gave this level at about $8, then we should have exited our position. But for those people that haven't exited their position, you need to look at what happens to the current share price of $65, and then also to see if the share price can stay above this level. Otherwise, we can also look at this range, which is just around $55. So the two scenarios that you should pay attention to: if it goes below 60, then you can expect the share price to go to about $55. Other than that, if it finds support here, then you can expect the share price to come back and trade, at least to trade somewhere around this level, which is about $74 per share. So whenever we trade the market, we have a series of alternatives that can happen. We don't just look at one potential scenario. There are two scenarios. At 65, the share price can bounce up, or the share price can go lower, then it goes to 55. Just by looking at the chart, if the share price drops to 55, then you shouldn't be worried. It is something that is expected, because the share price will just go to whichever direction that it wants to go. Then let's look at that Core Lithium ETF. Not ETF, it's a company. It's an individual company there. It's trading in the Australian market. So this company, I like it. It's still on the strong uptrend. So there's a nice positive case to buy this stock. What you see here, we can see that the volatility is going up there. The reason why the volatility is going up, you look at the range, how the stock market has been moving. If you look at the range of these high candles, or the candles where it's pulling low, you can see that they are wide, and then it shows here with ATR we use it to measure the volatility. So how will I play this stock? This is on the weekly time frame. So I would want to see how the stock perform on this range, last week range. So what we had here previously, we had this green candle here. We can plot lines here. Then last week we saw that we had an inside bar, right? So now for us to go long, we want to see the price coming back above the high of that week before last week. Otherwise, if the share price break below the low of this, it will mean that the downside momentum is continuing. So depending on the platform that you are using, if you are using EasyEquities and you are still bullish on the stock, you can have a buy stop order just somewhere below $1.50. It's Australian dollars. Then you can have a stop loss. You can set the stop loss somewhere around $1.25 there. So you'll be anticipating that the share price is going to trade higher. But if the share price it drops below that level, then you cut your stop loss. Remember, we always encourage people to use a stop loss. But things as they stand, this I think a buy stop order would be best suited here. If the share price goes above this level, then you can then get into this particular position. Then you'll be able to go up with the trade. But if it goes lower, then there is no need to chase the market. The market can always come back, because if it goes lower, it's possible that it can start trading below $1 So if it does pull back, then the other alternative is that if it comes back, we might expect it to find support here. If it bounces, then there we can buy. For us to be able to get that confirmation, we like to see the share price closing above this level and maybe having a wick to show that it's rejecting the lower prices. Then in terms of volume, we would want to see an above average volume, telling us that the buyers are pushing the share price high. So that's the nice thing about technical analysis. We can always form these scenarios in your head. They are not, it's not that the scenarios are always going to work. That is why we always encourage people to use a stop loss whenever they are trading. Okay, so today we've covered all the companies that people asked us on YouTube to cover. We started by going through the chart of AMD, then we covered DocuSign, and we covered that digital company. Then we looked at NIO, and finally we looked at SoFi. Then we moved on to the Australian stocks there. And then I said that I will share companies that I bought last week in my USD account. So the company that I bought is AstraZeneca. Those people that don't know what AstraZeneca is doing, it's a health company. It's a pharmaceutical company. They are based in Sweden, but they are listed in the US as well. The reason for buying AstraZeneca, we saw that we were anticipating that the share price was coming to this previous high level there. So we didn't have AstraZeneca in our portfolio. When it broke above this level on this week, that is when we started buying AstraZeneca. We shared this trade on Twitter to say that we are buying AstraZeneca. Then it went up a bit. So remember, we always say that sometimes whenever we are trading near a resistance level, the share price can break above the resistance level and come back and retest and then continue to go up. So you can either buy the first breakout, but if you miss the breakout, you can buy the retest there. And then in anticipation that the share price is going to continue to trade higher. And then if you are trading support level, the share price, it means that the share price will break below a level and then come back and retest before continuing to go down. If you do short a stock, you can short it when it breaks below the support level or when it comes back to retest the support level. Once again, you want to see the share price rejecting the higher prices, and then you want to see a nice big fat red candle there to show that the sellers are in charge. In this case, it's the opposite. What you want to see here, you want to see a wick here, meaning that it's rejecting the lower prices, and then you want to see a fat green candle there to show that the buyers are in control. We always trade, whenever we trade probabilities. There is no SoFi thing that it's going to work. So we first got AstraZeneca. We bought a couple of shares here. We're expecting the share price to go up from 65. It went to about $71 before pulling back, and then last week we saw it rejecting the lower share prices. That is when we added into our position. Whenever we buy a dip, we never pay a price that is lower than the price that we paid previously. So we bought AstraZeneca at a higher price there. So we were happy with that buy there as we added onto this position. I'm just trying to think what else we bought. We bought corn futures, but corn futures we bought it on eToro. So we bought this Tekram Coin Fund ETF. If it's an ETF, you can see there the trade is still starting to work. Basically what we bought, we just bought this breakout above this level. So the share price, it just pulled back a bit and then it rejected the lower share prices. We're still waiting to see how the trade is going to turn out there. I just want to see which other companies we bought there. I think we also bought a packaging company, PKG. Well, I don't think it's this one, but we did buy a packaging company on eToro, but it doesn't matter. The thinking was the same. We're looking at this resistance level here. So, well, if you look at this video, you see we have a breakout, retest, and then we expect the share price to go up. One thing that you should pick up from our analysis, we never buy companies that are in a downtrend. We don't like cheap companies. We are not afraid to pay an expensive price for the positions, because whenever the share price is moving up, it means that the momentum, it's possible that the momentum is going to continue to push further up. We are not interested in companies that are reaching new lows or 52 lows. To us, those companies are just falling. So we are not interested in those companies. We will never hear us saying that we are buying a stock that is trading at a lower level, right? So I hope that for the people that requested that we share this analysis with them, you appreciated this analysis. Please, if you enjoyed this video, make sure that you like. If you haven't subscribed to the YouTube channel, please consider subscribing. Your subscription and your viewership, it helps us to grow this channel. It also motivates us to continue to produce more material, because it means that people are interested in the material. The companies that we looked at where we were bearish, it's based on the chart. Other people, they look at different things. They could be looking at fundamental analysis. Other people, they would say that it's a long-term play. For us, it's not necessarily a long-term play. We are just buying companies wherever there is a higher probability that you can make money from those positions. We don't want to buy a stock and sit with that company hoping that one day that company is going to make us money. If that company can make us money, we want that company to make us money now. We're not looking to sit with a company hoping that 5-10 years from today we are going to make money from that. If there's a chance to make money today or this week or this month, that is when we want to make that money. Once we've made that money, we can shift into other companies and then compound our money with other companies that can make us money now at this moment. We're not saying that there's something wrong with hoping that money is going to be made in the future. We just want to keep on compounding our money. As long as there's an opportunity for us to compound our money, we just want to do that. So thanks to everyone. To the person that requested the South African companies, we will make a separate video covering those, because this video is already long. If we covered the South African companies, the video was going to be 2 times longer as it is at this moment. Once again, if you haven't subscribed, please consider subscribing, and please do like this video. Feel free to share it with as many people as possible, because the goal is to assist people. The money in the stock market does not belong to me, it just belongs to the market. So please don't be selfish with the information. If you help another person to make money from the stock market, that is just your kindness. Thank you. I will see you in the next video.